Hi guys, I'm Nicola McKenzie, founder and mortgage advisor here at Dunham McCarthy Mortgages. And in today's video, I'm joined by a very special guest, Kevin Harris, who is co-owner and CEO of Resale Residence. And he's here to tell us all about investing in new build properties. So to find out more, stay tuned. So guys, before we get into today's video, make sure that if you enjoy this interview that you subscribe to the channel and hit the notification bell so that you never miss any future uploads. And do you know what, today I'm just going to jump straight on in and start by just introducing Kevin. How are you?
I'm good, thank you. Thanks for having me, Nikki.
Thank you for joining us. I'm sure that today you'll provide lots of useful content for our viewers, so thank you for coming.
No problem.
So first of all, I think it's good just to set the scene really and let our viewers know who you are, what you do.
Sure, Resale Residence, we're a land agency that set up to be experts on the land side primarily.
Yeah.
And from an estate agent background, naturally what happened from there is we had control of all the new homes from there. Mm-hmm. So being from that background, I wanted to do things a bit differently.
Okay.
I wanted to offer out to the end users of the new homes something that's not your classic, just pick your 2-3 options. You can have a chance to bespoke your new home and basically give them what they want, is within reason. So that's on that side, and then what we're going to go into is obviously naturally some opportunities will also be buy-to-lets and holiday lets opportunities at the same time. So they're the two things really that we're doing. Land experts first, and then once we've got the new homes products to sell, then we want to put a very, very good slant on it where it helps the end user. Okay,
brilliant. So today I want to focus a little bit more on the investment side of things with the new builds, but generally speaking, can you give a bit of advice to viewers if they are considering investing in a new build? What general advice would you have for people?
So before you put down any money, you just need to be very, very clear in writing what specification internally you require, and to make sure that it's confirmed that that is what you're going to get in return at the end of the build.
And what's included with the sale, etc.
Of course, yeah. So that's the first thing. The second advice would be you need to be a bit flexible in regards to your timescales. Naturally, if I give you an example now, we've had numerous schemes that have been done during COVID, and obviously there's been issues where builders have had to go off-site because one builder has got COVID, which wipes out the whole team.
Of course.
And there's been delays because of that. There's been delays because of materials as well. And naturally, you've just got to be ready for that, not even just during COVID, but in any time.
Sure.
We've just got to, what I advise people is just be very, very clear that we will have a target line, but that could improve, and that could obviously, of course, go the other way as well. And for people, it's really important. They've got, it's an important decision buying something that's invisible at the start. And, I think more importantly, they've got plans. Everyone's got plans in regards to their personal life. Whether they're getting married or whether they're having children and they're required to move in by a certain date, it's very, very annoying to know that if it's delayed by a couple of months, what do I do? So you need to cover that off in your head first before you engage.
And have a contingency for that situation.
Exactly.
With that said though, I think that's the same across the board with property buying, because people always ask me the same question, how long is it going to take to get to completion? And I'm like, well, how long's a piece of string? There's so much that can happen in the house buying process that can set it back. So definitely just be prepared. So let's talk about investing in a new build property that's off plan.
Yes.
Can you tell us a bit more about the benefits to doing that?
The benefits of doing it, I think firstly, if you're obviously reserving again a plot or apartment in London whereby it's going to be built in 2 years' time, you're investing today at the market rate today of the property.
Yeah.
And then you're going to exchange and put the majority of your money down later on, in which case naturally in a normal market the property will actually increase in value.
Sure.
So reserving properties today for investment opportunities in the future has got two positive impacts. One, the capital value might increase over those over the build period, and secondly, the rental value may increase over the build period as well. Both are likely to be the case.
Sure. So you're locking in your investment at today's price,
exactly,
essentially.
Exactly, yeah.
Okay, so tell us then a little bit about what you would consider to be the pitfalls, some of the challenges involved, again, in investing in a new build.
Time.
Yeah.
I think, you know, someone might say, I want to invest now and I want to get a return today.
Sure.
So if that's the case, then a new build property is not for you.
Sure. So everyone's long-term goals and short-term goals are very different, so it's just one of those, isn't it? It suits certain people, not necessarily for everyone.
Exactly.
Okay, so can you then, Kevin, just expand a little bit more in terms of if I'm an investor and I'm on the fence, I'm unsure, shall I invest in a new build property or shall I just go to the resale market?
Sure.
What would be the clear advantage of me doing a new build, investing in a new build?
I mean, on the resale market, second-hand homes, you've got the issue where there could be structural defects there. There could be anything invisible there that even the owner that you bought it off of doesn't even know about, and that comes to light afterwards. Whereas if that happens in a new build, you're covered with a 10-year warranty that covers major structural issues. And then it would also come with a 2 years minor defects policy where basically, for argument's sake, if there's any issues with plumbing, then that would be sorted out by the developer, and you wouldn't have any issues there. I mean, obviously there's snagging as well from the first up to say 4 weeks of when you move in. That's directly with the developer then as well. So basically, in terms of issues going wrong and your bottom line in regards to refurbishments, etc., that you have to, you know, people can put 5 to 10% on an investment property. If you're really drilling down your numbers, you put 5 to 10% as defects or renovations, if you like, on a yearly basis for an investment. Here, you're considerably, in the first year, probably completely eradicating all of that 5 to 10%.
Sure, which is unknown at the end of the day. If you're buying a resale property, it might look good on the face of it, but you don't know, like you say, what issues are going to arise.
The boiler could break down, you never know, and you know, £7,000 later, you've got an issue where if a new build property, you wouldn't have that issue whatsoever.
So it's the hassle-free route.
Exactly.
Okay.
Yeah.
So in terms of buying then a new build property, let's say that I've weighed it up, I want to invest in a new build. What advice would you give to me in terms of what things I might need to check with the developer, with the agent? Okay.
So whereas I said before, when you're buying a new build property, you know, you want to be very clear in regards to your internal specification. Here, obviously, your specification is going to be very different as an investor because you may want something more hard wearing.
Yes.
So in that situation, that's what you want to be asking the agent / developer, or maybe making a request in regards to, you know, can I have more hard wearing carpets because it's an investment opportunity, not a end user lived in.
Yeah, so there's less emotional attachment, so to speak, and it's more about the practicalities of the investment. So in terms of buy-to-let investing then, Kevin, because I suppose this is fair, subjective to a point, everyone's got different expectations of what yield they expect from the investment. What would you say is a good yield to aim for in your personal experience?
I think that there's a couple of, let's say, models out there. I mean, the London market would obviously have a lesser yield, but would rely on a greater capital growth.
Yes.
So in London at the moment, I mean, excellent would be around 4%. That'd be very, very good. There are some opportunities out there where you can actually get 4% net as well. So when you pick up the when you calculate the ground rent, the service charge, the agency fees as well, then that could be drilled down to more towards 4%, which is again excellent in a place like Ilford. So that's something that we've got at the moment, whereby on top of that, we could also get a guaranteed rent scheme done whereby there's a pre-signed lease as well on there.
Okay.
So all that basically means is before they purchase the property or at exchange, they're actually got their tenant guaranteed for 5 years.
Okay, so that's very useful.
It's very, very useful because obviously the other bottom line figure that comes in is what are my void periods.
Absolutely.
So with the void periods, that knocks that completely out. So, you know,
it takes a lot of the risk out of the investment.
Exactly. So I think people need to be wary about if they see something on the internet that says it's a 4% yield, by the time you finish with it, it could be 2%.
Sure.
You know, factoring void, service charge, ground rent, agency fees, the bottom line figures of refurbishing it if it's not a new build. So these are all things to consider.
I think that's a very good point that you raise. It's about the net figure, and I think sometimes people get caught up in
Correct, yeah.
in everything but that, and that's what it's all about at the end of the day. So I agree. Okay then, Kevin, so leading on actually from what you've just talked about in terms of expenses and costs, other than the traditional costs that somebody would expect with purchasing a property, what other expenses would you advise people to factor in with a new build investment?
So Nikki, in regards to the other expenses, the obvious legals is there, stamp duty that a lot of people oversee because, you know, it's a very common mistake to think that the stamp duty that they paid for their first home is going to be the same for the next home, which is I appreciate a very common mistake to make as well.
People make a lot of incorrect assumptions with stamp duty for sure.
Exactly. And in regards to apartments, you've got your insurance.
Yeah.
I think if you didn't go down the pre-signed lease route where you weren't guaranteed no void periods, you've then got to worry about also, right, what happens if the tenants don't pay the rent? So there are rent guarantee insurances out there that are not expensive, that as long as the tenants pass the rental referencing criteria, they will actually insure you if they don't pay the rent. So that's a very important factor to factor in, but again, it's inexpensive. So in regards to going to a housing situation, i.e. not apartments, then in that situation you don't have to obviously pay a service charge there usually. And in regards to that situation where the garden would be upkept by the tenant, you know, there might be perimeters that need to be upkept by you as the freeholder because there's an agreement within the development in regards to who looks after the communal areas. Exactly. So that's something to factor in as well. But in a way, it's like a service charge in a way. So it is similar, but you've got to bear that in mind basically when you're looking at houses.
Definitely. And I think as well, just to add to that, I've seen, you know, sometimes again it's not all about the initial price of the property in many cases when it's an investment, because I've seen some apartments that are really attractively priced, but then there's an extortionate ground rent and service charge which is going to eat into your profits. So I think it's just about, guys, making sure that you really do drill down to those costs. So we've spoken, or you've touched on, rental voids and how you can sign lease agreements to get a guaranteed rent for typically 4 or 5 years. Are there any implications to somebody entering even into such an agreement, or things that you should be aware of, or is it as straightforward as it sounds?
No, I think the main thing with everything is you've got to check out who you're entering into an agreement with. You know, if it's an entity that's been going for 6 months, then you know you're going to steer clear of them. If it's someone that's got a large portfolio of properties and you know they've got a proven track record, then you know on those businesses it shouldn't be an issue. Nevertheless, really, to be honest, you could do both, have a pre-signed lease and still get a rent guarantee insurance. You could do both and cover yourself anyway. So I think you'll just need to work that out at the time and look into who's offering that, and as long as they check out and they're reputable people, then there's a lot of successful investors of ours that have gone through this process and you know for many years have had a no void guaranteed rent and no issues basically.
So key point, guys, I think it's just about doing your due diligence and going in with your eyes wide open, right? So Kevin, tell us a little bit more then about the off-plan investments, or just the general investments that you offer in respect of properties and new builds.
We've got stock, as I said, like the Ilford project, and then so there's a few properties, apartments in London that we'll be dealing with. We also go to Devon and Cornwall a lot because obviously it's a really hot potato at the moment.
Presumably people want to escape to the country.
Exactly, but then with that, obviously the holiday let market comes into play.
Okay.
So there's plenty of, I mean, usually houses down there is what we deal with in terms of opportunities for holiday lets investments there. We've got a lot of Birmingham stock as well.
Okay.
Again, usually apartments there.
Yeah.
And, you know, with good strong yields. I think, you know, there's a lot going on at the moment, but obviously with the land business in play, they're going to be more and more flooding in, you know, over the next few weeks and months, because predominantly we're getting the deals from the land side of the business.
So it all sounds very exciting.
Yeah, hopefully.
So I will, if you are interested in investing off plan or holiday lets, new build properties, then I will put links in the description below to Regal Residence so that you can have a look at what stock they have available. And Kevin, thank you very much for your time today.
Thank you again for having me, Nikki.
It's been a
really
pleasure,
appreciate it.
honestly, and I'm sure that our viewers have found today's interview very, very useful. And if you have, then make sure that you subscribe to the channel and hit the notification bell so that you don't miss any future uploads. And that's everything for today, so I'll catch you in the next video.